thinking about buying a home in or around Breckenridge, there's a few costs that don't show up until you get much deeper into the process. So my goal is to make sure that you understand all of them before you ever get to writing an offer, because what I'm seeing right now is a lot of buyers are focusing on price and interest rates. But that's not actually where people are getting caught off guard. It's everything behind that. And if you're thinking about renting the property at all, even part-time, that adds a whole nother layer to this that you really want to understand up front. The biggest mistake I see isn't overpaying. It's buying something that doesn't actually work for how you plan to use it. So instead of talking about this in general terms, I'm going to walk you through the actual costs the same way I do with all of my buyers, step by step, so you can see how this all adds up. So let's start with the one thing that's quietly changed the most, and that's insurance. Because this is really what's driving a lot of the other costs right now. Colorado is being labeled a dual catastrophe state. You've got hail and wildfire on the Front Range, and wildfire risk up here in the mountains. And because of that, insurance has gotten more expensive and in some cases much harder to get. And where this shows up for you depends entirely on what you buy. If you're looking at buying a condo or a townhome, your HOA is most likely going to carry a master insurance policy. But those policies have gone up significantly. What I'm seeing right now, especially on higher end properties, are HOA dues getting into like that $1,800 to $2,500 a month range. Now, that's not every property. Smaller non-luxury properties are definitely less, but once you get into the luxury condos with insurance, amenities, and snow removal included, that's where those numbers are landing. Now, if you're looking at a single family home, you might not have much of an HOA, but now you're responsible for your own insurance. And depending on the property, the location, and how remote or far away it is from a fire station, the age of the roof, trees, and defensible space, you may have fewer options than you expect. The average premium in Summit County in the last 90 days is about $3,100 a year for a single family home. But just to give you some contrast here, I was talking to someone the other day when I was riding up the chairlift. He's 10 minutes north of Silverthorne, and his premium went up to $10,000 a year before having to find another insurance company, eventually bring the rate down to about $4,000. So what looks like a lower monthly cost at first glance can shift pretty quickly once insurance is factored in. And this is one of those areas where assumptions can get very expensive. Now, when I work with buyers, this is one of the first things we look at. What are the insurance options on this property, and what does it actually cost before we ever write an offer? Now, once you understand the insurance, then the HOA seems to make a lot more sense, because the HOA isn't just a number, it's really a bundle of costs. And this is where condos and single family homes start to separate a bit. With a condo, your HOA is going to cover things like your insurance, your snow removal, exterior maintenance, trash, water, sewer. Sometimes you've got gas, heat, and cable and internet are covered, and your complex amenities such as hot tubs, pools, fitness rooms, etc. So yeah, the number looks higher, but a lot of your major costs are already included. Now, with a single family home, those costs don't go away. They just shift to you. Now you're paying separately for insurance, snow removal, maintenance like your roof and exterior siding and decks and repairs. So it's a lot less about which one is cheaper and more about how the costs are structured. So if you're comparing properties and line item them out, it sometimes can be a pretty close to a wash, but other times it's not at all. It's going to be very property specific. Now, once we get through those pieces, this is where almost every conversation goes next. Can I rent it? And what does that actually look like? Because this is where buyers are either making the numbers work or getting it very wrong. And if you're doing short-term rentals like Airbnb, VRBO, you're almost always using a property manager. So in Summit County right now, that typically looks like 25 to 30% of your gross rental revenue. And for higher end properties, it's very common to see that closer to 35% or more. Now that fee comes off the top. So if your property generates, say, $60,000 a year in gross rental income, well, now you're paying roughly $18,000 right off the top. And you still have HOA fees if it's a condo. You have your utilities, maintenance, taxes. So what a property makes and what you actually keep are two very different numbers. Now, a lot of buyers are also shifting toward midterm rentals, also known as monthly or seasonal rentals. And those have anywhere from 30 to 90-day stays. And there's two reasons for this. First off, that many properties are in areas where there are caps and wait lists to get a short-term rental license. So while an owner is waiting for that license, you can do midterm rentals. And the other reason is that the management fees are usually lower, more in the range of 15 to 20%. They also have less turnover, less wear and tear, but again, typically lower total revenue as well. So it becomes more about stability and an option of having income while you wait for your license versus maximizing income. Now, if you're not renting at all, there's still some baseline costs, especially if you're out of state and if you have a single family home. Now, most of my clients who aren't renting still have some level of property oversight in place. Typically, that's going to run you a few $100s a month, and it can easily go over $1,000 depending on how hands-on you want it. That's really just to make sure that you've got somebody checking on the property regularly, that issues are caught early, and everything is handled while you're away. Now, if there's one thing to remember from this entire section of the video, it's this. Short-term rental licenses do not transfer with the sale of the property. So if you're seeing a property on Zillow showing, let's say, $150,000 in rental income, that does not automatically mean you'll generate that. There may be licensing caps, wait lists, restrictions. And this is where I spend a lot of time helping buyers, making sure we're targeting properties that actually align with their income goals. If you're looking for an income generating property, that's something I work with buyers every day. I'll get rental projections on properties they're seriously considering so they can see the real estimates on potential income. Now just reach out and let's talk through what you're trying to accomplish and what actually works here, because it can be very tricky. So once you understand how the rental side works and what those numbers actually look like after expenses, there's one more cost that tends to catch people completely off guard, and that's the transfer tax. In certain towns here, there's a one-time tax due at closing, and the buyer typically pays it. Breckenridge, it's 1%, and in some specific areas, it can be 2%. Frisco, 1%. Copper, 1.5%. Town of Silverthorne is 1%. And Keystone is a little different. Most properties actually have no transfer tax, which is a big advantage compared to Breckenridge and Frisco. But there's exceptions, especially in the River Run Resort area where you'll see a 2% transfer tax. So it's something you want to verify on each specific property. On a $3 million purchase in the resort area of Keystone, that's $60,000 in cash at closing. And that's not something you can roll into your loan. Now, it doesn't make it a bad deal. It just needs to be planned for up front. Now, on the flip side, property taxes here are relatively low. You're typically looking around 0.5% of the home's value each year. So on a $3 million home, that's roughly $12,000 to $15,000 annually. And then there's the costs that just come with owning here in the mountains. Snow removal is a big one. Typically around $1,000 to $2,500 a season, depending on the property. Utilities are another. You can't just turn off the heat when you leave. You've got to keep the home protected. You got to keep the pipes from freezing and maintain all the systems. And those costs can vary quite a bit depending on the size of the home, whether it's a single family home or if it's a condo where the HOA may cover some or all of the utilities, because small issues here can turn into much bigger ones pretty quickly if they're not managed. Now, at the end of the day, buying here is an incredible lifestyle decision. But when you understand how all of these costs stack together, it becomes much easier to make a smart decision. If you're looking at properties and you want help breaking down those numbers or figuring out what actually works for how you want to use it, please reach out to me. I'm happy to walk you through it. And if this was helpful, please check out some of my other videos.